What's up guys, this is Chris. Welcome back to my channel. In this video we're talking all about one of the biggest stocks that ARK Invest is invested in that a lot of people have never even heard about, and this is a huge $70 billion company. So the stock we're talking about in this video is BEKE, otherwise known in Chinese as BeiKe, and this is a Chinese real estate fintech company. And ARK Invest over the past several months has been adding to this position, and you can see here clearly with the data right here, they have it in 3 different funds, all totaling over 6 million shares and 400 million plus invested into this company. So there must be something pretty good going on with the fundamentals going forward, because Cathie is generally a long-term investor who believes in companies that are innovating and changing the game in their respective fields. So when it comes to BeiKe, and actually interestingly that is Chinese for seashell, and basically the company is a online real estate marketplace. Is kind of like a Chinese ZILLOW, but it's actually a lot more than that too, because they have offline, they call it stores, but really, offline sites where people can, talk to realtors, and they have their own real estate brokerage on top of other brokerages that are on there that partner with them on their online marketplace, and they collect commissions through that and through their own business. So the company's mission basically is that buying real estate in China is very complicated, very expensive, and a long process. There are so many companies and realtors you have to go through, and some people actually don't use a brokerage at all. They kind of try to actually work with a real estate developer or just through word of mouth buying from the owner. It's a very tedious and inefficient process. So they use concepts like AI and data analytics to really make sure that whoever goes on the site and enters their data, like demographic information and geographic location, really make sure that they get the best match for that data to a potential buy, and they see a lot better conversion rates than traditional methods of buying real estate in China. And also they have a big focus on virtual realities. I'm sure a lot of you may be familiar now with virtual showings of real estate. We've kind of seen that in some markets here in the US as well. So people don't have to physically go to the site. And even after the pandemic, I'm sure that is just a matter of convenience as well, and really allows people to see more. That is definitely a big bonus to the company. And also, by the way, they have home repairs and kind of like a liability insurance type of thing, and really a guarantee. So they're really big on consumer trust as well, and kind of building a whole ecosystem there as a one-stop shop for all sort of home needs.
你看，补补就好了。漏个不停，贝壳找房商家承诺，房屋漏水维修补偿。
By the way guys, if you're getting a lot of value out of this, please make sure to like this video, because it helps out the channel and other people can get a ton of value out of this as well. So as I hinted in the intro of this video, this is a company that is growing very significantly. It's a $70 billion plus company. It is huge. It's not some kind of random Chinese penny stock that might get delisted or something like that. Their revenue grew 70% in the past quarter in Q3. So that is a very big thing for them. The transaction volume, the total amount of value that people are, contracting with, that is increasing a lot as well. And that is important because a lot of the money they make is on those commissions, and the more homes that are sold and the more pricey homes are sold, the bigger the chunk of commission that they get. So you can see here on the website that you could search by existing homes, select locations. It looks like are they selling a park or something? I'm not sure actually, my Chinese is not that good, but apparently this is $10,000 USD per square foot, maybe. Okay, and very interesting thing that I found in researching this company is that they are the #1 market share leader in entire China as far as buying a home. Like throughout, a population of, billions of people and such a large country, to be the #1 market share leader is a very interesting thing and a very powerful position that gives them a lot of leverage. They have 23% mobile monthly active user growth from Q2 to Q3, adding almost 10 million users that way. And that is a really huge growth, quarter over quarter, and only 3 months to grow at that rate. So they have over $8 billion in cash. They did raise a lot of money when they IPO'd actually, sometime around the middle of last year, I believe. And they did another share offering in November as well at $58 per share. Have a very good balance sheet, and the assets to liabilities is great as well, twice as many assets. With that revenue growth, there is going to be more costs associated with that and driving that growth, right? But so far, the growth of revenue as a raw number has been really great. You know, that has exceeded the amount of money that it costs to acquire that revenue. So, you know, they're growing revenue faster than they're burning that money. So, you know, that's what you want to see, right? And that makes it sustainable. So that's another good thing. And lastly, we'll talk a little bit about the valuation here. Now, when it comes to real estate companies and fintech companies, you know, financial technology, those are going to be valued more expensively. If you look at the forward PE on this company, it's around a 70. If you look at something like a ZILLOW, again, we kind of mentioned that earlier in this video, you're going to see it's a pretty favorable valuation. So I'm not too worried about that. And the price of sales is also at a reasonable level, around 8, 9, 10. Now, some of the issues that we want to talk about, because, you know, all that was great bullish stuff, and if ARK Invest is, you know, making moves here, it's probably already a good thing, right? You can kind of trust it a bit, but still you want to think about a couple things here. One important thing is that although Chinese mortgage rates are down as with the rest of the world, you know, in the US, the housing market has been great as well because interest rates are low. They probably won't be low forever. That is a good thing, right, for the time being, but in the short term, you also have some pains here. Now, with the whole real estate business, generally Q4 is the weakest. So if you look at some of the trends here in November, December, January, February, in the short term, those tend to be pretty weak months. And so that's kind of hinted here. If you look at the Q4 guidance for BeiKe, you're going to see that the revenue is pretty flat, right? It's going to stay at $3 billion or so for Q4 as well, same as Q3. You have to factor in also the idea that China wants to really limit price appreciation of real estate, because, you know, it's kind of, you know, for a long time, Chinese real estate has been notoriously pretty damn expensive, and everyone thinks it's going to crash. But that's kind of been the case for the past 10 years. BeiKe does continue to grow its market share and lead digitalization and simplifying the home buying process on both sides, right? As the seller and the buyer and even the middleman here. But on the other hand, you do have a slowdown in the price of real estate and potentially the overall number of sales. It's going to slow down in terms of the growth rate. It's still going to grow, but not as much. And you're kind of seeing that potentially in Q4 because it is flat. But on the flip side, right, again, you could also argue that the idea that it is flat and that's still 30-something% growth is pretty good, considering that Q4 is a slower month in general. Okay, we've got the BEKE BeiKe chart right here, and you can see that since the IPO, it's gone up huge. Generally, the trend after it IPO'd, right, was pretty much a clear stair-step pattern, right? Just generally showing you here, a very nice clean channel. It did break down. Okay, tried to retest that high around here, and it just couldn't make it and went back down. Okay, this is a classic double bottom pattern though. We've talked about this on the channel before. Very important one to know. If I zoom in here, you could see quite clearly there is a low here, and pretty much, you know, it peaked a little bit under, but generally speaking, bottomed out around $57, $58 per share and bounced back up. And you see a really nice clean candle right here as well. And wow, guys, look at today. So I'm recording this part of the video, the technical analysis, the day after. Plan to release it, you know, Wednesday, January 20th here. And man, Stock has gone up huge today, 15% move on pretty big volume, right? Besides the chart pattern, you do have very interesting here. If I zoom in here, look at the moving averages. Those are the squiggly lines right here in different colors. Those represent different time periods and the average price over that time period. On my particular chart, you have the 9-day, 20-day, 50-day moving averages right here, and you can see them all converging, right? They all happen to converge pretty much to the T on this particular day, and a lot of people take that as a sign of bullishness. All right, just to give you an insight, if we look at one of the other big Chinese stocks that have been moving huge in the fintech space is Futu, and that is one of the best stocks that I've personally recommended here on the channel since I believe September, right? My September stocks to buy video, and as recently as January when this stock was only $30-40 per share. It's gone up tremendously. But once the stock moves out of a consolidation period, I'll just zoom out a little bit here and you can see this sideways period, right? For example, in this sideways period, once it breaks out of that all-time high, you could be seeing very significant gains. I'm no fortune teller, so I wouldn't say so exactly, but I can definitely tell you that if it does break that high, to expect more highs and more upside from here for sure. All right, guys, that's it for this video. Make sure to subscribe for more great content like this, and I appreciate every single one of you. Until next time, my friends, stay well and invest responsibly.